does take us to our talk of the tape. All that is riding on tonight's results for what is, by the way, once again, the biggest market cap stock on earth. Nvidia's slide, Apple's gain, Microsoft's pain, making that happen once again. Bryn Talkington is with Requisite Capital, Malcolm Ethridge with Capital Area Planning Group, both CNBC contributors, and both join me now. Bryn, you first. All right, Apple is once again the top dog as it relates to market cap. What do you need to see tonight?
Well, they're expected to have 4% revenue growth, right? So this has been my issue for a while, is this revenue growth is still so anemic. I think the market wants to see excitement around what's happening in China. They are losing market share, but they're still, what are their sales in China? What's going to happen with a 17 phone? We know they're going to make billions of dollars. We know services will be strong. But to me, it's what do we need to get excitement around the stock? And ultimately, I still think it needs to be more than 4% revenue growth. I think Apple will be a market performer or slight under market performer this year, because I just still feel there's too much cloudiness about we need to have a refresh cycle. It's not going to be the 16, or it doesn't seem to be. So now I hear analysts are already talking about the 17 phone. We need to have revenues with the phones that we have today to start actually thinking about getting margin expansion, which I just don't see happening this quarter.
Malcolm, I do not remember a time in recent memory where we have had this much negativity about this particular name going into this particular report like we're going to get tonight. You say that Apple has a lot more to prove during this earnings report than they've had in the past 4 quarters. We're talking about 1 year. Why is there so much pressure on this company tonight?
Well, Scott, I think Monday's sell-off proved why Apple is so important and why Apple has to justify this lofty valuation and share price that it has. If you look at the mechanics of what happened in the market, Nvidia traded down, and instead of putting those dollars to work in treasuries or something else significantly safer, those dollars flowed to Apple. And so Apple has 2 problems. 1, they're still the safe haven trade, and they still have to justify this higher share price. 2, they've had 4 quarters of declining revenue, and shareholders are growing tired of having to wait to find out whether Apple Intelligence is actually going to be something meaningful, or if it's just really splashy graphics and PowerPoint presentations that got everybody's attention away from ChatGPT and whoever else was dominating the news cycle.
Mm-hmm. I don't hear anybody excited, for the most part, about buying this stock ahead of the print. Malcolm, is that how you feel as well?
I wouldn't be buying this stock right here. I think that the share price is significantly elevated above where it probably will be following this earnings report. However, I wouldn't be selling either, because I definitely think that Apple has something up its sleeve. I've been making the case for a little while now that this will be the year for FinTech. And I think that Apple might be one of the companies to participate in a meaningful way. So to Bryn's point about them needing to diversify the mix and increase services revenue away from just relying on handset refreshes, I think that financial services is one way that they can do it. And I think that Apple is poised to make that happen for a ton of reasons that are happening under the surface right now.
Aren't you confident, Bryn, though, that Apple is going to get this refresh cycle? It's just going to be rolling. It's not going to be what it always has been. They drop a phone. We go to the September quarter, the numbers are gangbusters, and it's just going to be different this time. What's wrong with that idea?
Well, there's nothing wrong with that idea, and I think that's what we have right now. But ultimately, when you look at Apple 3-5 years from now, where you can't just rest on just upgrading the same phone, because if people are not upgrading faster, then it just comes down to services. And so I just think that Apple's in this unique position right now where we all have iPhones. Because the technology is so good, we don't need to upgrade as quickly as we used to in the past. And so then you say, well, what multiple do I want to pay for that long term? What are my other options? And for me, the reason why I sold half my position in December is I said I would rather own more Robinhood. I would rather own Uber. And so there are other names I want to deploy capital to outside of Apple, which growing at 4% doesn't get me excited about the company, regardless of the moat and the C-suite and the great team they have there. There's other places I think that are going to earn a better return.
Speaking about would rather own, I wonder if both of you would rather own Meta today than Microsoft, because neither one of you are in that name and both of you are in the latter. Malcolm, what's your takeaway from these earnings?
Yeah, I am very impressed that Meta continues to find itself in the right place at the right time. Right, we saw Meta shares sell off I guess it was early last year when Mark Zuckerberg made it clear that he was going to invest about 25% of their revenues into building out AI capabilities, and the market turned on him. And then we found out that he was in the right place at the right time. Now we find out that by building open source instead of deciding to go closed like OpenAI and others, Meta happened to be in the right place at the right time. And so I find it interesting that this company continues to defy gravity and continues to show strong growth in advertising revenue specifically. I do wish, to your point, that I had held on to my shares a lot longer. I bought it as a trade when it sold off, thought that I was getting out at the right time, and apparently I sold too soon.